Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, November the 24th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, and how that all comes together to impact the markets with some of my market analysis. I do the same thing for you folks in these daily market commentaries, but I'm going to go a little bit further, and we're going to talk about my option strategies that I implement in my portfolio on any given day based on those assumptions I come up with in my market analysis. For you all, what I've also done is gone and streamlined the process of finding the right option strategy for those assumptions we come up with. We aren't just picking option strategies out of the hat here at Pro Trader Strategies. What we do is we look at our directional assumption in that underlying, look at everything that's going on around that particular asset, and then find the right strategy that is the most appropriate for that given underlying. All right, so we aren't just saying it's going to go to a point and we buy calls on a bullish assumption. No, what we do is we really drill down on it. Sometimes we might be selling puts. We might be doing an iron condor for a different assumption. So please check out those webinars at Pro Trader Strategies, because that will give you some more detail, more color as to what I'm doing here in these daily market commentaries. All right, so let's get on with the economic data across the pond. Nothing really to see there. But today here in the United States, I talked about it was pretty decent week for economic data that we needed to look at. And we got the Richmond Fed manufacturing coming in at 15, expected to be 20. So a little bit lower than expected there. And that was after last month's high mark of 29. That was the highest reading we've seen in over probably 8 months. But coming off a little bit this week. And then we move on to sorry, I messed up here. What else we got going on here in the markets? We've got something else. CB Consumer Confidence, that's what it was. CB Consumer Confidence coming in at 96.1, expected to be 97.7, so lower than expected there. But we did get a revision of last month's number up from 100.9 to 101.4. So a nice little adjustment there. Not quite making up for that headline miss, but definitely something a lot of people will be talking about for sure. All right, now let's move over to the markets. What's going on? Well, you know, we aren't going to have a vaccine by the end of the year. We're going to have 3. So markets really celebrating today. NASDAQ being a bit of a lagger here, but the Dow Jones Industrial Average, the index, created a 30,000 print. We've seen that happen over in the futures, but that printed overnight, right? And I've talked about this. Are we going to see a rollover, or are we going to go see those highs from the overnight trade printed during the day session? I always say that that is something the markets really focus on, and that was achieved today in the futures. So we got a high mark today. I think last I checked it was 30,067. So we've printed that in the day session. Now we need to start really looking at it. There's some stocks that are really making all-time highs here. Have we gotten ahead of ourselves? Is the market just wanting to print that and put some pain on people that feel like they've missed out on this big rally that we've had, and some of those people that were on the sidelines start coming back into the market? Well, we say that the markets will create as much pain as possible. Is this the time where it's going to try and start putting some pinch onto people? If you've been lowering your overall cost basis, you don't have as much to worry about, but we do need to kind of keep an eye on that, see if we start seeing the markets roll over. All right, so let's take a look at crude oil. Is moving higher by almost $2 today. Well, go figure. Last night was going to fill up my gas tank, about a quarter to empty, and I was like, you know what? I'm going to wait for a little bit of pullback, maybe $1 or so. Well, $2 higher today. Probably should have filled up my tank. Probably cost me a couple of dollars as well on a full tank of gas. But crude oil moving higher here. Part of it's probably due to the weakening dollar. We talked about that yesterday, where dollar-denominated assets should do very well. It's not really working out over there in gold right now. But we are seeing crude oil move higher, and I think that this is more of the reopening trade, manufacturing starting to pick up ahead of the holiday season. If you're wanting a bike or workout equipment, you're probably not getting it for the holiday season. Let's just say that. Anyway, not two things on my list, though. All right, gold futures off by 36 points, testing 1,800, right down to that 200-day simple moving average. Now, I've talked about this. I said once it comes down to this 200-day simple moving average, it was going to really get me thinking to add some longs in gold. Well, we'll talk about that later, what I've done in GLD, but I am playing this to the upside. It could go down and test this point of control, but if we start breaking down too far, I'm going to look to cover this. It's going to have a pretty itchy trigger finger on it, but I do expect that gold is going to start recovering here relatively soon. The weakening could be very well where people are pulling out of the safe haven and throwing it into the equities. All right, bonds off by 22 ticks on the day. I have no trade in this, but I do expect this to want to migrate a little bit higher. I just don't see the Fed raising interest rates anytime soon, which raising interest rates would cause this market to come off. It's that teeter-totter, right? We talk about that, interest rates versus the bonds. So as the market goes up and they toggle back and forth, they're directly inversely correlated. All right, now VIX is starting to move a little bit higher throughout this day, off of the lows anyway. You know, it's still in negative territory for the day, but it is pushing off of those lows and near the highs, and I think that that's because people are starting to add a little protection up here at these all-time highs. Here's the Dow Jones Industrial Average Futures. This is where we were talking about. It created that 3,000 print overnight twice today. This was printed during the day session and actually not too long ago. As you can see, that was a intraday day session. The 3,000 print, I'm not going to be able to see it here, but the 3,000 print was created overnight. Let's go to the 30-minute and we'll see. Probably be able to see it. 30-minute. 3,000, I think that's it right there. So there's your 3,000 high print overnight just before the open. Am I lining that up right? That doesn't look like a 3,000 there. It must be a few days before that. All right, so, but anyway, that 3,000 printed during the day, so that makes it a solid number. All right, NASDAQ is pushing higher by 110 points earlier this morning, about an hour and a half ago. It seemed like I think it was in negative territory. So gangbuster move to the upside here. One thing, Tesla blasting off. I'll pull that up on a chart, but Jeff Bezos just passed to go into second place for billionaires, just behind Bezos, Musk, and then drawing a blank on Microsoft. I don't know why. Bill Gates. All right, so he just surpassed Bill Gates. To pass Bezos, Tesla stock has to be around 950 or something, okay? So a little bit of a ways to go. All right, so NASDAQ continue to march higher. E-mini S&Ps are just blasting off. There is no weakness in this market. It looks like it wants to try and print this trade here, which did, I believe, happen overnight again, as well as the same time we saw that happen over there in the Dow Jones. But up 54 points on the day. We take a look at the breakdown of the E-mini S&Ps. You can see here's that high mark that I was talking about printed in the night session. We went up there to test it. Came up just a little bit shy, so I'd have to say that we probably aren't out of the woods for the upside. It might be just some consolidation profit taking going on, but we're talking about this rubber band. We're still within that range of that rubber band winding up, getting a bit of a snap here of the day, but it's usually when we need to break out a little bit further than that in order to get that real sharp move happening. Feels like a sharp move, but it's still within that range of what we would talk about as that rubber band winding up. But you can see off of the open, just unabated excitement for the E-mini S&Ps. All right, so what do we do on big up days? Well, what do I do? Big up days, big down days? Well, big couple of down days here. GDX, this is what I added to my IRA, okay? It's a little bit smaller. My IRA is a little bit smaller than my trading account, so I also wanted to diversify a little bit here and not just go all in on one type of contract here. So I went into GDX, relatively small, and went into the March, bought the 39 calls in there for $1.18. I am expecting us to make a move higher here as the weakening dollar, we have stimulus, all of those things. I think that this is going to see a rebound in gold relatively soon. I'm usually early though, people, so maybe wait for a confirmation here on the upside. And then in my trading account, I went into GLD. It's a little bit bigger dog here, and screwed up and did the D's as I was trying to fire this thing out. Ended up scratching the D's 172 calls in there. So put that trade on. That is the wrong thing to do. But the D's is very close to expiration. We see that theta decay happening, breaking one of those major guidelines that I talk about on when we're buying options in low implied volatility. We don't go into the D's where there's only 25 days to go. That theta decay will just eat me alive. So I decided to scratch those and rolled it out into a more appropriate month, like I did with the trade in my IRA, and went into the Feb though here and bought the 175 calls in there for $3.80. Obviously expecting a rebound back into this area right here towards that point of control where we've seen a lot of volume happening. I think that this point of control is going to want to migrate a little bit higher. We've got a point of control down here and a point of control down here, which is two counter-opposing points of controls, or two magnets trying to draw these in opposite directions. But I think that this one is going to shift higher if we get that, especially if we get that rebound. I think that that is where the pricing in gold futures probably is more appropriate for this type of environment. And then we go over to IBM. Now, you guys remember just last week I covered all of my trades there in IBM, where I basically had on a strangle around this and legged into the strangle around it, sold some puts, sold some calls, lowered my overall cost basis by about a total of 85 cents. Well, I decided to go in here and get back in the game and sold some IBM December, sold the 129 calls in there for 73 cents. So obviously we'd have to break out of this little range. We're right back to the point of control, which is a magnet. I've talked about that in other markets, right? It is going to want to hold it in and around this area. Plus, we've got the 50 Fibonacci just above where we are at, basically, let's call it 125. So I've got a resistance area, a point of control that's kind of holding me here, a resistance area. Buy me some time to see some theta decay happen in this trade. Now, when we're doing covered calls, we aren't necessarily looking at the environment where we can see here I have really low implied volatility, right? So my implied volatility is relatively low compared to the range that IBM has seen. Let's try and draw a line there. So basically here is our area of where the implied volatility wants to stay. So you can see that it's relatively low. So obviously selling these calls is just to stay mechanical and lower our overall cost basis. We're not necessarily taking into consideration the implied volatility here. I'm just thinking I'm probably covering up the implied volatility right now. But anyway, I'll have to think about that ahead of time. The implied volatility here is relatively low, but we're just looking to lower overall cost basis. This isn't on a trade that we would normally just put on. All right, it's completely different there. We're just trying to stay mechanical in this trade and stay alive. So those are the three things that I've done today. I'm going to ride those out. Otherwise, check out Pro Trader Strategies as we are looking at, and you know, one of those things, you know, sell the rips, buy the dips. Check out that webinar as well. I've got the dip in gold, selling the rip in IBM. It's had 2 big days to the upside. There's probably a lot of people that are itching to cover here, especially on the weaker hands. Doing very well in that trade. If you guys remember, I am long at 120 in this underlying from the earnings trade that kind of came back and snapped. We have pretty much covered that gap, though, that we created on that earnings trade. So that's everything. Check out the webinars. We're doing a whole course on these guidelines where we come up with our assumption. We're not necessarily thinking about the exact strategy that we want to implement on any given day. That's not how we go through our day. What we do is we look at the markets and we come up with a directional assumption and then look at the internals to find the right strategy for that. So that's what we're doing in this particular course. A little bit different than what we've done in the past where we've talked about that strategy throughout. This one, what I like to do is try and build it up to that final strategy, which is what we would normally do on any given day. All right, so that's it for today. Please take a moment to go over our disclaimer because we are an educational company and we are not here to give you guys trading advice. I'm here to teach you guys how to implement options into your portfolio, how to trade an option. It's not investment advice. So please know your risks by reading over this for a moment. And that's all I got for you other than one last thing though. If you can't take that, take it easy.